All right, let's kick this off with something that should feel familiar to every single Bitcoiner out there. We know that Bitcoin continues to earn our trust every single day that it stays alive, and it's been doing that for 17 straight years since 2009. And in that time, we've seen all of those other tech trends continue to burn hot and then vanish, and Bitcoin continues to get stronger the longer that it survives. So what we are talking about here is called the Lindy Effect. And it's one of the most powerful ideas for understanding why Bitcoin's future keeps looking more inevitable the longer that it sticks around. Think of it like this: the longer that a certain thing has been around, the longer that people expect it to be around. That is the core idea behind the Lindy Effect. It applies to ideas, to books, to institutions, and certainly it applies to money. The US dollar has Lindy, gold has a lot of Lindy, and Bitcoin is stacking Lindy faster than any monetary network in history. And this presentation today is about why that matters, why time itself is becoming Bitcoin's most valuable feature, and why every block mined is another nail in the coffin of the fiat system, and why capital, serious capital, is finally waking up to what this thing actually is. I want to give you guys some bull fuel during a Bitcoin dip, so here you go. Because when I say that Bitcoin is inevitable, I'm not trying to give you another meme. I am trying to mean it in the most mathematical, time-tested, survival-hardened way possible. This is Bitcoin through the Lindy lens. Let's go. Now let's break this down from the top, because the Lindy Effect might be the most powerful mental model that most people have never heard of. The Lindy Effect is very simple. The longer something non-perishable has existed, the longer it's expected to keep existing. So if a book has been in print for 100 years, people naturally assume it'll be in print for another 100 years. If an idea has lasted for 1,000 years, odds are it'll last 1,000 years more. So Lindy is really about survival. It is proof that when something becomes more popular, it becomes more resilient, and resilience compounds. Now let's apply this to Bitcoin. Remember, we mentioned non-perishable in the definition. Last time I checked, Bitcoin doesn't wear out, it doesn't corrode, and it doesn't age like food in a fridge. It ages like a cathedral, like a language, like a civilization. Every single second that Bitcoin stays online, it just continues to earn more credibility as time passes. Every single block that is mined without interruption is another point on the Lindy scoreboard. And this is where it gets wild. The longer Bitcoin survives, the more time expects it to survive. And this is why the Lindy clock isn't linear, it accelerates. That's why Bitcoin is no longer a science experiment, it is financial infrastructure with time as its armor. So when people say Bitcoin is still early, they are right, not because it's immature, but because it is durable, and durability amplifies over time. So the Lindy Effect turns uptime into reputation, and then reputation turns into adoption, and adoption turns into monetary gravity, and that is just the beginning. So let's zoom in on the facts. Bitcoin went live in January of 2009, and since then it's been running 24 hours a day, 7 days a week for over 17 years. No breaks, no bailouts, no downtime, no CEO calling in sick. This kind of reliability, if you haven't been paying attention, doesn't exist in traditional finance. Banks shut down on the weekends, stock markets close overnight, and payment apps glitch out. But Bitcoin, it just keeps going like it's a financial Michael Myers. And it hasn't just been alive during this time. If you've been paying attention at all, you know that Bitcoin has been relentlessly attacked time and time again. We know that the governments have tried to ban it. Media outlets have declared Bitcoin dead and have written it off hundreds of times. Developers have forked it, cloned it, tried to outsmart it, but Bitcoin never blinked. It just absorbed every single attack. It upgraded its code, and it mines the next block over and over again. It has been battle tested over and over again in the harshest financial climates. When the banks collapsed, currencies hyperinflated, and trust in institutions eroded, Bitcoin kept doing the thing that it was designed to do: produce a new block every single 10 minutes. And that consistency is the heartbeat of the Lindy Effect. With no drama, with no central planner, and no emergency meeting, we just saw the raw protocol secured by the most powerful monetary computing network on Earth, with more brute force security than any government, bank, or nation state could handle. Every block that it mined just increased its credibility, and every confirmation added to the global sunk cost of trying to stop an inevitable network. Every single halving event continues to ratchet up the scarcity while its survival record compounds. So 17 years of uptime isn't just a tech stat, it is proof of life in a hostile world where everything else seems either rigged or broken. Bitcoin has already become the most resilient monetary system ever created, and its Lindy curve is just getting started. Next, we are going to see what that curve actually looks like, because the longer that Bitcoin survives, the more unstoppable it becomes. Now, here is where Lindy gets supercharged. Let's say you're looking at a 17-year-old protocol. Most people think, cool, it's been around for 17 years, but Lindy flips the script. If something like Bitcoin has lasted 17 years, then it's expected to last at least 17 more. That means Bitcoin right now has a projected lifespan of 34 years, and when we hit 25 years, let's say in the year 2034, that's 25 more added on top, and now the market starts projecting 50 years of future Bitcoin, not hype, not hope, just time-tested math. So that's how the Lindy effect works in conjunction with Bitcoin. It's not just measuring the past time, it is forecasting the future with every block, and that completely changes how capital allocators view risk. Because most assets get riskier over time, but Bitcoin gets less risky the longer that it survives, because every single year, without failure, adds another layer of armor. And that armor becomes priceless in a world where everything else, currencies, banks, bonds, keep showing cracks. So let's take this even further. By the time Bitcoin hits its 40s, its projected lifespan reaches into the next century. And when something is expected to outlive entire governments, its value starts reflecting that. That is how Bitcoin transitions from tech curiosity to global monetary backbone. Not by hype, but by time itself. So next up, I am going to show you how this exponential Lindy effect is amplified by adoption, because when time and users compound together, Bitcoin becomes totally unstoppable. Okay, now we add fuel to the fire here, because Lindy doesn't just apply to how long Bitcoin has survived. Remember, it also applies to how widely it's used, and this is where things go parabolic. If you guys didn't know this, today there are over 350 million Bitcoin users worldwide. More people than ever are holding, using, building, and integrating around this network. This is the embedded inertia into the asset. The deeper Bitcoin roots itself into the global infrastructure, the harder it is to dislodge. And this is user growth compounding the Lindy effect. Every single Lightning node that's spun up, every wallet that's downloaded, every new self-custody user adds surface area to Bitcoin's immune system. The network gets stronger, not just from time, but from participation. And this is where the game theory behind the asset only starts to sharpen. The more people that hold Bitcoin, the more that miners secure it, the more developers that build on it, the more capital flows into it, and the more institutions allocate to Bitcoin, the more political defense it actually gains over time. Every new user of the Bitcoin network increases the social cost of attacking it and the economic cost of ignoring it outright. This is the Lindy effect on network steroids, because you're not just betting on the protocol surviving, you are betting on a living organism that is feeding on time and growing stronger every single block. And the Lightning Network, that is Lindy's second layer. It's turning Bitcoin from a savings vehicle into a global settlement engine with real-time speed and still Bitcoin under the hood. So we've got a monetary organism that has been alive for 17 years, grown to hundreds of millions of users spread across every single continent on the earth, and runs 24/7 with perfect uptime. This is what we call financial gravity, and if it holds, the harder it pulls. So now we need to look at price behavior over time, because even the market itself reacts to the Lindy curve. Even if you strip out the tech, the ethos, the philosophy behind Bitcoin, the market itself is telling the Lindy story. This is how the Bitcoin timeline plays out in price. It took 693 days to go from $0 to $1, then 1,031 days to hit $1,000, then 2,508 days from $1,000 to $69,000. Some people might look at this price action, think that it's random, momentum, but it really is exponential maturity. The longer that Bitcoin survives, the deeper the market roots become and the bigger the capital pools it enters. And when capital shows up, it doesn't just chase returns, it is still chasing that resilience. And that's why Bitcoin's volatility is actually decaying over time. That is why the drawdowns are getting shallower every single cycle. And this is why institutions are finally starting to become comfortable allocating to it. This is only going to speed up. It's not going to slow down. We know that in 2011, a 90% crash was terrifying. In 2022, a 64% drop was normal. So what happens next? We have a 50% drop. Oh my gosh, it's not a big deal. It's just business as usual. Because what happens next? Bitcoin just shrugs it off and continues to climb again because the markets now understand something that is very fundamental to the Bitcoin asset. We know that survival equals strength. And price action isn't just emotion, it is an emergent signal of that belief in the uptime of the network, belief that it is scarce, belief in the Lindy effect itself. And every single 4 years, we get a little ritual to mark this passage of time, and it is called the halving. There's no CEO ringing a bell or a government cutting a ribbon. The code just slashes the new issuance in half on schedule and without fail. That is Lindy in motion, scarcity with a clock attached. So think of every halving as a public Lindy effect ceremony, a reminder that time is running out and Bitcoin is still here. So when people ask, why does the price go up? The answer is very simple, actually, because time continues to pass. It is measuring entropy and Bitcoin continues to survive. So let's talk about where this is all heading, because the Lindy runway is massive and Bitcoin's future is starting to look mythic. Here's where it all comes together. Lindy turns from a theory into a superpower. Let's fast forward to the year 2036. By then, Bitcoin will have been running nonstop for 27 years. Now, according to the Lindy effect, that gives it a projected life expectancy of another 27 years, which would be 54 years total. Now, pause and ask yourself, what else in finance has that kind of time horizon? Not your currency, you've seen the purchasing power destruction. Not your bank, we see those continue to need bailouts, if they get a bailout at all, of course. Not your bonds, we know that we're in a sovereign debt crisis, and therefore not even with most governments in the entire world. By 2036, the market is going to start treating Bitcoin like it is a century-grade asset. It's not going to be trading like it's a tech play anymore. It is going to be a monetary monument expected to outlive fiat regimes, central banks, and corporate treasuries. Now, you have to ask the question, what is going to happen when the market starts to see that timeline? Well, everything is going to change, and it already is, kind of, because we're starting to see the risk premiums dropping, the volatility is shrinking, insurance funds will allocate toward the asset, the nation states are going to build their reserves, and sovereign debt will start to look a lot more shakier by comparison. You see, Lindy is creating a time moat that is so wide that capital just can't ignore it anymore. So when you add on that additional layer of the network growth, if Bitcoin continues growing adoption at just 7% annually, which is far below its historical average, the network effect just compounds violently. We're talking a multi-trillion-dollar valuation potential just from the math of user adoption plus time. So where does that leave us? It leaves us with Bitcoin having a projected lifespan deeper than most fiat currencies ever achieved. Bitcoin with an adoption curve eating into the legacy system, and Bitcoin with its fixed supply, increasing trust and accelerating Lindy momentum. By 2036, Bitcoin will be dominating slowly, silently, and permanently. The longer that it lives, the harder it is to imagine a future without it, and that, my friends, is the real forecast. Lindy goes parabolic, and time is on Bitcoin's side always. My name is Adam Livingston. I am the Bitcoin Wizard. Thank you so much for tuning into today's Orange Pill session brought to you by Swan. Now, if you want to be positioned before 2036, well, Swan Private is for you. Swan Private helps individuals and family offices be well positioned before the capital rotation into Bitcoin. And they help you be positioned before this incredible wealth shift securely and strategically. If you want professional help with being secured in your Bitcoin position, go to swan.com/nosecondbest to learn more. Please like this video and subscribe to the channel on YouTube in order to support our mission of spreading the orange gospel to the masses. Have a terrific day, everybody. Do not party too hard. Class dismissed.